Good afternoon, everybody. We're excited to have Kobus Lamprecht here from Roeder and Associates. He was the guest speaker, one of the guest speakers at our recent property investment event. And yeah, we've got the opportunity to have a little bit of a further conversation with him regarding some of the things he brought up in the presentation, what's going on with the economy, the market, and especially specifically the Cape Town property market. So Kobus, I'd like to ask you, and maybe tell the audience a little bit more about your background as an economist and how you got into the industry.
Yeah, thank you very much for having me, Jock. I'm glad I can finally sit on the couch. I've heard about the couch. So I've been an economist for 15 years. I studied at Potchefstroom, Northwest University, and I actually didn't want to become an economist, funny enough. So at that time, you could choose between risk management and economics and international trade. And I first wanted to be a risk manager at a bank. That sounded quite cool, and with a good salary as well. And so I did my undergraduate degree risk management, then my honors international trade, and my masters. So I actually did then want to become an import and export focused work, analyzing those industry basically in a training environment. And then as it happened in 2012, I started as an economist in Cape Town. I worked for a company called AfriForesight. I did a lot of mining research, so commodity markets, your gold, iron ore, platinum, steel, those types of markets.
Okay,
and I worked under Jacques economist, Jacques Botha. He was the chairman, and he trained me a lot in my 20s. So I traveled, and he took me on all these meetings to buy profile clients in Johannesburg, like Harmony Gold and Sasol at a young age. And I was just going in there, and I had to just take notes and learn, and it helped me a lot. Worked very long hours, but it helped me at the end of the day. It helped me a lot. And then, as I said, a mining economist, and then I joined Roeder in 2017, and so I've been almost 10 years now with Roeder.
Kobus, I know there's been quite a lot of changes recently at Roeder. I think there was a buyover and there's restructuring, and Arvin has kind of stepped down as the owner.
Yes.
As far as I understand, he's still involved. Maybe you can tell us a little bit more what happened and where the company's heading and where it is now.
Yeah, so it's been quite a lot of changes, and it's actually a very old company. I don't know if people know that, but Roeder and Associates was started in 1987 by Mr. Arvin Roeder. He's still still the chairman. He's in his 80s now, but he's still active with editing the reports, but he's not so active. He says he first said he's semi-retired, and then that changed to retired. And he tells me on the phone he doesn't check his emails anymore. I must call him. So whenever I need him, okay, Arvin, you need to look at your emails. Because I still bounce some ideas from him. He's got a lot of experience, and he pioneered a lot of the property research in South Africa. And he actually first worked at Old Mutual, and then created a property division, and then started his own company. And we've been surveying the property industry in South Africa from that time, at 1987. So we've got almost 40 years worth of data for Roeder now, and we've obtained it through quarterly surveys that we send to many companies in South Africa, over 100. And my job is to analyze all the data and then publish it in reports, and then we also discuss with people. And what's changed for Roeder is that 2024, and it was acquired by the Valuator Group, and April 2024 it was the official new date of the new company.
Okay.
So Roeder then moved its valuation company to a separate company.
Okay.
It still stayed Roeder and Associates, but it's a total separate company with a CEO, etc. And then the research division, where I'm the chief economist, was changed. He created a new company called Roeder Publications, and then we added media into the name, because we brought media in as for our news. We're publishing news about the property industry and other industries, also about the economy, big factors that will impact the property market. And so we created we had a new website, and then the media section. So we actually were voted the best property news website of the year last year
Wow,
at the
congratulations.
SAPOA Awards. Thank you. So Mark Pettiford does that, and he's done a great job. But yeah, we're still going to do a lot more with that. And with the new Rhoda, we've got a big investment from Redimension Capital,
Okay.
and
Fantastic. It's exciting.
we want to bring in a lot of tech into our research and the way we present data. And yeah, there's still a lot of exciting things that we're going to bring to the market that we're busy with behind the screens. And yeah, so we've also partnering more with people in the industry and in industry associations like SAMRA. We can maybe touch on it a bit later as well.
Fantastic.
And yeah, so very excited about where Rhoda's going, and we brought in quite a number of new people with a lot of experience with different aspects, especially on tech and in property itself. People that's been working many years in property, so that's very beneficial for us. And
Yeah, fantastic.
yeah, we're getting many smart minds together now.
Yeah, wonderful. Yeah, I've had a look at your website. I must say it looks really incredible. You can see it's ready for the next era. And a lot of the
Thanks.
articles also are very high quality, so it's a lot of high quality content. We've got a newsletter every month that we send out, Executive Property Summary, so I always do
Yes.
like a lot of
Yeah, I
research
saw that. I saw
on
that.
what's happening in the market, and yeah, some really insightful articles that have come out of there.
Thanks.
Yeah, so Cobus, I think I'd like to also get into the economy right now.
Yes.
It's a question that's on everyone's minds with the war in Iran and petrol prices, especially the diesel price that's gone through the roof in recent months.
Yeah.
And maybe just give us a little bit of insights. What impact do you think that's had on the economy and the trajectory going forward, and then also the property market, beyond the economy?
Yeah. Because people are very uncertain at the moment of what's going on. Obviously, the now petrol prices gone up, especially diesel. Diesel actually got up a lot more than petrol. And there's a lot of opinions, social media, what's happening. But I think the big picture is that your interest rates cuts that was that was forecasted in the beginning of the year. The consensus was that we will have about 3 interest rate cuts this year.
Okay.
Small ones, but nonetheless, the expectations that we're going to have interest rate cuts. The door is basically closed on them. Maybe some door could open by the end of the year, but don't count your chickens on that. The big thing is that inflation is going up, and it's not a South African thing. It's overseas as well. American CPI was 3.8%, the latest one. And our inflation is going to move up closer to 4 and higher even in the short term. So that will force the Reserve Bank to rather, well, I think it's already forcing them that they are taking a more cautious stance to the way they approach the interest rates, with the wait and see approach. They're going to see if the inflation, if it's going to have a sort of, will it pull through, have a more medium term impact or a rather short term. At this stage, it looks like it's going to be more a short term thing. But I want to be proactive and probably look at either hiking interest rates or having a sideways movement. Internationally, we're going the same direction.
Okay.
UK probably going to have to hike, Eurozone as well. The US, the consensus is a sideways movement at the moment, but that can change. We've also seen some of things like the US bond yields, long bond yields has gone up. So it's a dangerous moment at the moment, that things can get really worse if the war, not the oil disruption continues for longer. It could really get bad, but at the moment it's more of a short-term impact. We'll have to have a few hikes to get inflation closer to the target level of 3%, especially if it get to that 4% or higher level. It's going to get dangerous because it gets too far from the target level of 3%. Yeah, so that's the main thing with the interest rates, and your inflation, as I said, is going up, and it's not only because of the fuel. There's other impact on other sectors as well. You can think of the food impact. The fuel's going to push up your fuel prices, and there's also been disruptions to other type of costs that we import from the Middle East. So that is something to consider. There's other things as well, like the El Nino. There's warnings about the El Nino that we could have very dry weather from the beginning, from the end of this year, and heading into the beginning of 2007. So there's risk for the food inflation outlook
Okay.
if that materializes.
Mm.
But yeah, that's the main story, I think. So slower growth expected economically wise than previously. But remember, we are coming. The economy has been picking up last year, and last year the economic growth rate GDP was 1.1%. So this year we're looking now closer to 1%. So it's not like we're having a recession, but yeah, it could get worse. But at the moment, we basically just pull back the expectations of that pickup in growth we had at the beginning of the year.
Okay. And the Cape Town market has been doing very well the last 2 or 3 years, with quite a lot of growth and a lot of demand from semigration and also offshore. What do you think this impact would have, call it medium term, over the next maybe 1 to 2 years on the Cape Town market and the outlook for prices and also rentals?
Yeah, if you look at apartment rentals or house prices, maybe just start with that. Apartment rental growth or housing rental growth has been growing at about 7% in the first quarter. That's the state data. And your house prices, the Lifestyle industry shows about 8% growth as well for Cape Town, Western Cape, and that's significantly higher than the rest of the country, as most of the viewers will know. Probably what will happen now, it's winter time, so I think buying activity will probably slow down a bit, and there's uncertainty of what's going to happen. This is personal, the war, because people are feeling it when the petrol costs are going up, food prices are going up, and that impact on the households, on the consumer spending, that is negative for the economy, and it will make that some people won't be able to afford bonds, and rather just wait until this is over. But same side, when there's a market slowdown, there could be opportunities for investors that could come in and get a better deal in a Cape Town or Western Cape, if you take a longer view, because the impact of this is more short term. If you look at a longer times horizon, 2-3 years, given if you don't get surprises on the political side, economic growth will probably go up further, closer to 1.5-2%, and you could have the prime rate resuming that decline that we would have expected this year. It will just be later, because in the long term, the big thing is that your inflation predictions is that because the Reserve Bank changed the target to 3%, that inflation will eventually return to that 3% level. But to get it there, that's the thing. If the inflation gets to that level, then we could have have more interest rate cuts, and that will benefit the Cape Town market. So yeah, in summary, a bit of a short-term slowdown, but the Cape Town has got all that dynamics that has led to it being such a great performer, with the infrastructure being well maintained, government doing quite a good job, let's be honest, and other things counting in our favours like tourism. But yeah, there is some short-term factors. Also with the storms that we've seen the last few weeks, has been also that, in Afrikaans sê hulle mense gaan eers met opruim nou. So it's about fixing the damage and consolidating, and so, and it's winter as well, where we usually more quiet.
Yeah. Okay. No, that makes sense. So maybe a short to medium term buying opportunity. Start looking at sentiment dropping, and then sellers maybe wanting to get out of the market. I also want to ask you, you spoke in your talk, you spoke a little bit more about SAMRA and multifamily housing.
Yeah.
Maybe you can tell us a little bit more about that. What is multifamily housing? What role is it playing in specifically Gauteng, and what role do you think it's going to have to maybe play in Cape Town? Where could we maybe see more of it in Cape Town?
Yeah, good question. Good question, Jock. So the multifamily housing is, there's an association called SAMRA, and they're the South African Family for Residential Rental Association, and they basically, you can be a member if you're a multifamily housing company, and then you can become a member of them, but there's certain criteria. So it's usually big institutional investors that buy big apartment blocks or big estates or complexes, and they manage this. It's one company manage everything. It's not individual private people that's got 1, 2, 3 apartments.
Yes.
So it's a big company with a lot of capital. And I visited some of these multifamily properties in Johannesburg earlier this year, and it's quite amazing what they can create. It's actually world-class properties. So some of these I visited. This was Africa's property in close to the Rosebank, and it's a retirement home. They refurbished, and there's swimming pools. There's a cinema room, and you can just plug in your laptop there, watch your cinema, your rugby, or your football. And there's paddle courts in some of these estates.
Yeah, fascinating.
And event rooms. So also, I didn't mention in the talk, but there's also places where you can like have a setup with cubicles where you can work from home in the place where you live, and then they have cubicles for your online meetings, for your Teams meetings. It's kind of next level. And the rent is some of them are affordable, some is more luxury, and what you get with the rent is amazing. You get free internet and all these other amenities, and it's a very competitively priced. If you compare it to what a private landlords can offer you, it's very difficult because the Samra companies can offer a lot more, and we track the vacancy rates of those apartments versus the other apartments, and we found that the Samra vacancy rates are a lot lower. But at the moment, most of the companies, about 75% of the sample we have, of the 60,000 apartments we track for Samra, 75% of that is in Johannesburg, and then some in Pretoria, and then in Cape Town it's only about 3%. So in Cape, of those apartments.
Okay.
And then so in Cape Town CBD there's some, and in Somerset West, but it will grow. But it's still in Cape Town. It's still small, and its asset class is very big. I'm talking specific about multi-family housing as an asset class. It's very small in South Africa, very big in places like Australia and America in the developed world. So that is something that South Africans must get accustomed to. It's something that's going to pick up.
Yeah, that's very interesting because that should have an impact on the private landlord once it starts becoming a big factor. If you own one sectional title unit and there's someone building a complex of 500 units, they can definitely outmuscle you if it comes to rental prices, etc. So it's definitely something to keep an eye on. In Cape Town, I mean, what have you seen in Cape Town in terms of this sort of housing, and do you think it could be a solution for the lack of affordable housing in Cape Town? Do you think it could play a role?
Yes, it could, but I think there's a land challenge as well, because to get that amount of that quantity of open land, that is going to be a challenge, because you want to be close to your schools, university, because of your work. So it probably will have to be more refurbishments. That would be my feeling about it. If you want to be closer to the key hubs in Cape Town. But to give you an idea on the Samra sample, I mean, these companies that they own, some of them own like 55,000 apartments. So
it's massive.
So some I think even more than that. So it's massive companies, and it's easily to manage, especially with things like marketing and maintenance as well. They've got in-house. The ones I saw was in-house maintenance. They've got a room there, and you can just contact or talk to them or scan your QR code, and it links to a maintenance team, and it's so much more efficient.
Yeah, that's wonderful. That's definitely something to keep an eye on.
Yes.
I think one other thing I'd like to ask you is, of course, there's been the new Airbnb legislation, and the Western Cape government's now announced that there's going to be additional rates and taxes being charged on apartments or units that are primarily used for short-term rentals. What are your thoughts in terms of the impact on the market? Call it again medium term. Of course, there's a lot of things happening with the war, with the slowdown economically. And what do you think would be the impact in terms of the Airbnb market?
Yeah, very good question, Jog. I believe the people will probably think twice about looking at Airbnb because they now need to take account this tax because that's going to hit your yield. It's ultimately you're paying more, so it will impact your net yield at the end of the day. But it depends if your margin is so big and your yield, if you, the extra cost you're paying is only maybe it reduces your yield by only 1%, then it's not that big of an impact. So I think the net impact will be there's going to be probably some people deciding not to do it and rather than doing a longer term letting. So there will be more apartments on the longer term market, and that will be beneficial for people that want to then rent, because that will hold back a bit of the rental growth that we've seen, the very strong rental growth we've seen in Cape Town. That will help some of these people, because a lot of people complaining about the significant increase in rentals we've seen in Cape Town.
Yeah, just the supply and demand at play. So
Yeah.
I think there's definitely something to keep an eye on.
Yes.
Because I think lastly, to conclude, I'd like to also just ask you about the industrial market.
Yes.
The industrial market's been running really hot in Cape Town. The other areas of South Africa as well, but it is one of those markets that, there's a lot of demand. I think it's probably the most demand I've ever seen in the industrial market. Prices are extremely high, even for older buildings. Rentals are very high. You're looking at rentals over 100 rand a square meter, which used to be office rentals, and those are now becoming more commonplace in the industrial market. What is your view in the next couple of years with the industrial market in Cape Town? Where do you think that's going to go?
Well, it's a good question again, because it's again your affordability question that you have for residential. It's the same with office and industrial. It's a significant challenge for tenants.
Definitely.
And a lot of the demand has been coming from online retail sales. So the logistics side of the market is really driving us. It's not manufacturing per se, like in the old manufacturing sites. Manufacturing production in South Africa is underperforming, has underperformed for a number of years for obvious reasons like high electricity costs. You can add to that labor instability with strikes and things like that, over wage increases, or whatever reason. So the logistic side and has really driven that. A lot of the companies moved into that. If you look at the big REITs like Grove Point, I think it's Montague Gardens, they've also got a project where they've got the old PPC site, and they've got quite a number of units they're building there now. And I do think we'll probably see more growth in industrial rentals. There's a chance that it could cool a bit because of the affordability levels. If I can remember correctly, the industrials didn't see such a big downturn when COVID came. It was more in offices. It was very resilient, and offices had that big shock. So with office rentals that fell, it came from that low base, but industrial has just been staying at a resilient higher level and been continuing. So could be more challenges on there to keep that rental growth rate continuing to rise at this significant level. I mean, the Cape Town rentals was up in double digits last year for industrial space. So, but the demand is, Cape Town's got good factors counting the land. There's a land scarcity, and there's a lot of people moving here. So the demand for goods, you need a lot of goods here in warehouses. So there's a strong demand here. So that's going to drive it.
Also small businesses, if you move here and you had a business somewhere else, you have to operate your business here, and you often need factories. So we've seen the small factories have gone extremely high. It's almost like retail rentals, some of the spaces.
Yeah, it is amazing to see the rentals. But we publish all those rentals data in the Road Report on a quarterly level, over 200 pages, a book that we publish. And we publish all those rentals per industrial node in that book for all the major areas in South Africa. Do the same with office property. So I think for viewers it's great to get that data and a viewpoint of what's happening, because the market has moved up quite fast, and you need to stay up to date of what the market levels
Mm.
are at.
Yeah, I think we're in an interesting place at the moment because there's been this rebound from COVID, especially in the residential and industrial, and
Yes.
now suddenly there's this damper because of the Middle East, and I mean stock markets are all-time high. Both the JSE was recently all-time high, and then I mean all over the Western world. So even with a war and with quite high oil prices, we're still close to those levels. So what are your thoughts in terms of a possible global turndown? Do you think that's likely, or
Okay. So
we're speculating a little bit here? But I think
speculating.
it's
Okay,
definitely a
you want my
question.
personal view on this?
Mm.
Okay.
Yeah.
So
Off the record.
off the record. So my feeling is that there will be a big global downturn
Okay.
sometime.
Okay.
It's not easily to call it because the stock markets can't continue
Yeah,
forever like this. And to have American stock markets at an all-time high while this is happening,
Mm.
while the consumers are really under pressure. I mean, some
Crazy.
places in America it was $6 a gallon for
Mm.
gasoline. So it's
Mm.
ridiculous, and American people is very unhappy about this. And Trump's approval rating was the lowest it's ever been. So this is a worldwide issue. But again, I don't want to touch so much on the war impact. I've done that already. But sometimes there will be a pullback.
Mm.
We've seen the big pullback in COVID 2021.
Mhm.
2020. That's when we had really the last big one in March of that year. And 2022 there was a bit, but it was not a major one like 2020. So I think of it in my head like every 7 years roughly
Mm.
there's a major pullback. But again, it's not a definite, but there will be some pullback sometime, and for the market just to get more to a sort of normal level.
Mm.
I think what for America and some other places in the globe as well has been the AI that's really pushed up
The next technology wave.
productivity,
Mm.
and that's kept that market up, and that's still continuing. So it's a matter of if the companies that's involved with AI can they deliver
Mm.
to that expectations, and that if they don't, then probably might see a pullback. But there might be another reason. Look, we're not sure that the war, this disruption in the Middle East is definitely going to be over.
Mm.
So there is a risk now that it can continue, and Iran might, not give into a deal sort of to have Mr. Trump look bad in America so that he doesn't stay in charge, or the Republicans stay in charge, that there could be a more democratic government coming in place, which would be easier to deal with. Because Trump is very hardline on their approach at the moment with nuclear weapons, Iran not having a nuclear weapon. So that is on the political side as well. So, but again, taking a long-term view, there's always been pullbacks, and there's been major crises. If you think of the Asian financial crisis in the 1990s, in the 2007-2008 crisis we've had, there's always been these crises for whatever reason, but it's usually short-lived, and then somehow we get out of that crisis. There will again be the opportunities for the risk-averse buyer, the one that wants to take a big risk and really get in. That will be the time. But you can't sit in your hands and just wait until that. It's better to stay longer in the market. You'll have a better return than waiting every time just for that pullback. But if you have cash during that time, it would be
Good time to
amazing.
buy.
Yes.
Yeah, so would you say at this stage is a good time to be looking at your existing portfolio, see where you can optimize? We've been spending a lot of time with clients on the portfolio asset management solution and helping them just make their property business run more efficiently, find extra cash flow, sometimes upgrade or convert units into smaller units, etc. Do you think it's a good time to focus on that sort of thing for call it the next maybe 6 to 12 months, rather than rushing out to buy right now, or what would your
I would say that's a good approach to have. Look at your properties and see if you can make it perform better. I think one of the big things I got from today is from the presentation you had is that property investors need to think differently about property. it's not necessarily going into offices or going industrial. Maybe there's your existing property you could make better use of that. For example, your university student in Stellenbosch, you could maybe get an international student or subdivide your property into different rooms and then rent that out and get a high yield on that. So I think speaking to an expert about it is beneficial, and sitting down and regrouping and re-strategizing how you're going to approach this. But I don't think that it's definitely not a major downturn at the moment in stock markets, and if you look at property markets.
Yeah.
We're not at that stage. We're not in the recession stage at the moment. Not at this stage. There is a risk of that, and then you'll have to reevaluate again at that stage. But at the moment, it doesn't look like it's going to be a major crisis. But again, I can sit on this couch maybe in a year, and it could be a recession. And I said, okay, I warned you, but there is still a risk of that.
Yeah.
But the market, if you look at the Rand exchange rate, it's still in the 16, your South African long bond yield, there hasn't been a big worsening in there. So the market doesn't think that we're going to have a very long crisis at the moment, or recession.
Yeah, so it's best at this stage to get your strategy right, understand what you want to do, what you want to achieve, and then look for the right deals. And if you find the right deal, then go for it. But don't necessarily just jump in and buy just to buy. Would you agree with that? Or what?
Yes, no, I agree with that. No, you don't have to rush in. I mean, there could be FOMO in some cases, a lot of people buying in the suburb or there. Same with the stock markets. If a lot of people suddenly decides to buy Mr. Price, and then you go and buy Mr. Price, you just need to be careful on that. And sometimes you feel like you're missing out, and then the price already gone up, and then you come in, and then you in that risky situation. But the guy that was in the beginning, he bought at the beginning of the cycle. He's that guy that moves first and makes the bigger profit. Yeah, but I would also say you went on to buy, so you want to get into that. You want to have a better level that you get into. But I would say stay up to date with what's happening in your local property market, what's happening to the economy, all those impact. You obviously don't run in like headless chicken and just buy just for the sake of buying and making a profit. I mean, property it's a long term. It's a long term market, and you need to wait for your return over time, and therefore carefully select your properties, because you can easily burn your fingers. So look at study your location. Look at where new MyCity bus routes will be. Look where close to schools or university, or where a lot of companies work, or where there's retail space. Where you're going to find those tenants. Yeah. If you buy a property, you need to make sure you're going to got tenants, and you've got a working municipality. You don't want to struggle with bills that's 50,000 rand water bill, or funny amounts that can't be explained. And you agree with that?
No, definitely. No, I think what we've been seeing is a lot of the demand. Your chart actually showed there's a lot of first-time buyers.
Yes.
And what we're also seeing is there's a lot of demand for people that want to move to the Western Cape from a lifestyle point of view. So it's safer, it's more secure, the municipalities work. We actually recently had a property just before this war broke out.
Yes.
Property in Somerset West, which has been one of the best performing suburbs. I think under 5 million, it was like top 2 last year.
Okay.
And I was blown away. We had properties was in the market for 3.15 million, and we got 200 inquiries within 2 days. We ended up getting something like 16 cash offers within a week.
That's
and
amazing.
We were like completely, dumbfounded. I mean, lawyers were phoning us, kind of wanting their buyer to be front of the queue and demanding we sign their offer immediately. It was a frenzy. This was just before the war, so I think everyone's calmed down a bit now, and we've had the storm, so it's kind of this double damper now. Right now, and winter. So it's interesting to see what happens next, but there's definitely a strong demand for people that want to just plant roots in the Western Cape, live here, get their kids into good schools, settle down, just have more stability in terms of their, the property element of their life, especially, other areas have been having a lot of challenges, as we've recently seen with Helen Zeller's Joburg
Yes,
mayoral
yes, no,
campaign,
that's yeah,
rowing in the potholes, etc.
provided
I think it's
a
been,
lot of laughs.
it's been very entertaining,
Yeah.
but it also highlights just how bad it's gotten in some areas,
That's true.
which I think is necessary. You know, it's one thing to just accept things are bad, but you also need to create the awareness that, you know, things can change and people realize, like, look, this has gotten too far.
Mm.
Cobus, I think wrapping up, is there anything else you'd like to share with the audience? Anything else you think relevant to them?
No, but I was still fishing when you spoke about the Elizal. But there was another one of the DA was sitting fishing. I don't know if you saw that one.
No, I didn't see it.
But they were fishing in one of these, I think it was a pothole, big pothole or something. Or a road that wasn't working properly. I
That
don't
one
know.
with the rowing just got me. I mean, honestly, it was hilarious. I think.
But yeah, that's the big question about Johannesburg now. Will the DA come in there to fix it up? Yeah, because certain parts of Joburg is really not looking good. But there's some parts really functioning well. If you look at Waterfall, Rosebank Saint, and so there's some good still pockets that's performing well on that side. But yeah, I agree with the Somerset West story you gave. There was that other hotel there. Was it the
Lord Charles. Yeah, they
Lord
launched a big
Charles.
development now recently.
Yeah, that also sold out quickly. And if you think about it, there was the Baldwin. It's got massive developments there.
Gordons Bay.
Next to Satari. So there's quite a lot of
Huntsman,
apartments
yes.
being built, and to then still have a demand like that with a lot of supply coming online shows you there is really it's really a strong demand. But it's going to be now interesting to see with this immigration as well how that evolves. But what I wanted to add is that it's not only the Cape Town doing well; it's a lot of places in the Western Cape. If you look at the, George, that Garden Route area, Plettenberg, Mossel Bay, a lot of demand, a lot of people moving in to that side. It's also pushed up the rentals significantly in George. And in the West Coast, not Saldanha, Langebaan and Eiserfontein, a lot of new developments there, demand coming in. But yeah, Langebaan's got a lot of developments. A new mall, relatively new mall, the Nautica Mall, and then Hermanus is another one. So there's a lot of places that's been getting new people in. I would think that most people have stayed. Some have moved to Joburg, where they find that it was challenging to work in the Western Cape and where the affordability was not so great. But it's also the weather. I think some people from Joburg complain that it's just too cold.
Yeah.
Well, especially now you complain about the weather because of the 2 storms we've had in 2
If
weeks.
you don't like the wind, you're definitely not going to like this kind of wind.
No, so-
Roofs blowing off left, right, and centre.
Yeah, and solar panels flying into your garden. Yeah, so that's quite scary. The wind, the Cape of Storms sometimes. But yeah, there's some opportunities. I think about it with this small town still in the Western Cape that maybe that's not so close to the coast. Maybe you start thinking maybe there is some people that could move to those towns. Oudtshoorn, has benefited from George booming. Oudtshoorn is also seeing a bit of a pickup in the market.
Okay.
But yeah, it's got its own challenges as well. But yeah, sometimes you need to think out of the box where you're going. But Cape Town's still the hub, and that's where most of the important economic developments are happening. Yes.
Yeah, I've seen a lot of the demand has been driven by affordability, and a lot of the like lower end suburbs are also starting to get very good growth. I mean, Eerste River was one of the areas that really grew quite a bit. And we've been quite active in that area. And
why do you think Eerste River is? Why specifically is it?
I think so. Eerste River is surrounded by 2 established suburbs. So you've got Somerset West on the one side that has that whole Croydon and Satori area, and then on the other side you've got Kuils River, which is also like developed quite a lot. So Kuils River's road infrastructure's gotten much better, extra industrial development and a lot of retail.
Yeah.
So on both sides it's stable, developing, prices are growing. So it's in this kind of zone in the middle where it's benefiting from that. So prices are being pushed up. People are coming in and saying they can't afford maybe to buy in Somerset West, but they can afford Eerste River, and they take a view on the area, start spending money.
Yeah.
Now, I've been fascinated to see areas like Eerste River really pick up quite a bit. Even Mitchell's Plain was some of which always gets a lot of bad news about all the shootings and how dangerous it is. But Mitchell's Plain's prices have been growing. Areas like Retreat and southern suburbs, I mean, areas like those used to be, call it 1 million, 1.5 million areas. Now they're going up to 3 million pricing.
Yeah, so the challenge is to identify those,
yes, 100%.
where the next ones will be.
100%. So I think it's very interesting at the moment to see what's coming next, and I think it's important to be ahead of the trend and look at, you know, where can you buy, where you can get
Yes.
cash flow, but you also, you know, want to own there long term, and you can
Mm.
manage the tenants, and it's an area that you would like to own a property in, because Cape Town's just been growing. I think your chart showed, you know, it's been growing consistently every year from 2000, I think. 2000 it dropped a bit in 2009, and then after that, I was actually amazed. I think if you looked at the numbers, it was like 200 on the index in 2000, and now it was something like 700. So it's like almost tripled in the last 20 years. And if you look at a lot of the other areas of the country, some of their prices are the same as they were in 2003, 2004.
I think a
even
big-
less than the peaks.
The big
in
thing, if you look at a
2008.
historical chart like the Cape
Mm.
Town house prices, there is some periods where there will be slowdowns and,
Yes,
and maybe
sure.
in, like we had in 2008 that crisis and there was declining prices shortly.
Yes.
So, but it's also always recovery
Mm.
after that.
Mm.
But yeah, I think the government's very important. They're
Yeah.
doing a great job if that continues, and they're investing a lot of money in
Yeah.
infrastructure,
Yeah, they are.
and that is vital.
Mm.
I mean, what Johannesburg, the infrastructure is falling apart,
Mm.
and they're battling financially. Yeah. So that kind of thing is very important for the city to grow over the long term.
Mm.
Yeah.
Yeah, Cobus, thank you very much for your time. Thank you for being a speaker at our investment seminar.
Yeah, thank you
And
for having
for
me.
your time. And yeah, it's really been a pleasure, and it's been very insightful. And yeah, thank you everybody for joining us, and we'll see you next time. It's Jock Revere from Grove Properties. Have a great day, everybody.